Hi everyone, Daniel here from One Mortgages and Protection, your mortgage and protection insurance brokers. I hope you're liking the new video. I hope you're liking the content. If you do, please be sure to like, share and subscribe for all future videos and information on all things mortgages and protection related. Please take a look at our website by searching for One Mortgages and Protection or check us out on all social channels. Thanks very much and enjoy.
Hello, and this time on the Mortgage and Protection podcast, we've got Daniel Condren from One Mortgages here to answer your questions on bridging loans. Daniel, welcome back. How are you?
I'm good, thanks, Tessa. Yeah, good to be back. And I think today's episode is all about bridging loans. Is that right?
All about bridging loans, an interesting topic to cover, isn't it?
It is, definitely. It's exciting about bridging loans. So yeah, it certainly be a good topic for everybody. So where do we start?
Okay, let's start with this one then. We've got a list of frequently Googled questions as normal. You know the drill now. So to begin with, let's go back to basics. What is a bridging loan?
So a bridging loan is it's a loan, borrowing the money, but it's to either purchase a property, but very, very quickly. So typically a bridging loan is bridging a gap between, selling your home or buying another one or just acquiring a property very, very quickly. So bridging loans come about when you buy an auction property or you're selling your property, but you haven't quite got the money yet and you want to buy another property of some type, but you just want to do it very, very quickly. So a bridging loan can be any period, typically between 6 months to up to 2 years, and sometimes even can be extended longer, but it is a short-term mortgage, let's call it that.
Right, okay, no, really well explained. It's given me Homes Under the Hammer vibes. There are other TV, obviously, programs out there, but yeah, when they're selling the houses off at auction, is that right? Is that kind of what we're looking at?
It is, yeah. Anybody that's in the development space or renovation, refurbishment. So you buy a property that's a little bit run down or needs a little bit of work, needs improvement of some type. Most properties don't go through the normal sale with an estate agent, so they go to an auction because the person selling it, the vendor just wants a quick sale. But some auctions, actually, the price can go above market value in the current climate because there's so much opportunity for gaining money and making money on property.
Right, okay. And then I've got another little point here. What's the difference between a regulated and an unregulated bridging loan then? I know this is an important part, isn't it? And to cover this.
Yeah, so a bridging loan is typically in an unregulated space, but you can watch this space in the industry because even when commercial deals like buy-to-lets, HMOs, bridging finance, they are becoming more and more regulated. So the advisor might not be regulated to offer that advice, but the lender treats you as you're a regulated customer nowadays anyway. So they go through the right type of due diligence, they go through the right type of vetting the customer, the buyer, just to give them that added protection. So I suppose what's the difference between a regulated mortgage and an unregulated mortgage is a regulated mortgage, you are actually getting advice on the deal that you've been given, all the facts around what you've got, what you've done. So you've got a lot more protection. Whereas bridging loans and commercial finance and other things like that, buy-to-lets and areas like that, it's a commercial decision. So therefore, there are a lot of brokers and banks that treat this as an unregulated deal. So therefore, there's less protection in there. But we treat all our unregulated options as regulated anyway. So we go through the same process. We try and get the best deal for the customer and review everything that. And you should really be doing that because the customer might be a little bit upset if you're not getting the best deal, then the customer is ultimately going to be not inconvenienced, but they're going to be affected by not getting the best deal. So you should be trying to get the best option, whether that's the best rate, the best service, the best something of the advice. So I hope that gives you an idea of what the unregulated space is compared to a regulated space.
Yeah, it's definitely an important one to know, isn't it, and to be aware of. So, no, that's a really good point. And then moving on, who's a bridging loan for? Can anyone get a bridging loan?
I would like to say yes if your circumstances are strong, but it just depends on you, the customer. It depends on whether you've got experience in property, whether you've owned a property before. I certainly wouldn't expect a customer to come in and say, I want a bridging loan to buy a £500,000 house. And if they've never owned a house, they've never had a mortgage, they've never done that, it would be very difficult. But it does depend on the circumstances, the requirements of the customer. If they've got a big enough deposit, they've got a good credit rating, they'll do that, and the deal stacks up. So it's all about what the plans are for what you're trying to achieve. Buying it quickly, flipping it, selling the property, renovating the property, refurbishing it. There should be a lot of profit in that deal. Now, if there is profit, I think many lenders and funders would want to do that. So you can never say never, but yeah, most people can do this if they're in a good position. So yes.
Right, okay. And then, to be honest, I think we've covered this, but you might have more to add. What can bridging loans be used for? We've already talked about auction and house purchases and things like that, but do you have anything to add on to that?
They're commonly used when the customer doesn't have the funds or means to be able to buy the property or renovate the property. So you might buy a property and you might not have enough money to finish it off, or you might not have enough money to acquire it. If the purchase price is 200,000 and you're a little bit short, you might want to bridge the gap to just purchase it and acquire it, and then borrow extra to actually renovate it. A lot of customers might not have hundreds of thousands spare to actually buy a property, renovate it, and refurbish it, and then either sell it or do anything. So it's a very good system to make profit, to make money. Buying a property, acquiring it, renovating it, looking at the cost of works, how much is it going to cost, who do I need, what's all the cost involved, and then looking at what the GDV, the gross development value of that property, right at the end of the once you've done everything, we'll be able to work back whether it was profitable for the customer, profitable for everybody in that, and that's what the lender is going to look at in a lot of fine detail of, have they estimated the right costs of the development? Have they estimated the right building materials, which in the current climate, materials are going all over the place. So does the math work, and is it going to make money? Very rarely do you get a deal passed and accepted if the deal is not going to make money. If they're not going to make money, then the lenders will not entertain it and say, I'm sorry, it's not one for us, and move on. And that's a job of a broker, is to find the lenders that are going to say yes and the lenders that are going to offer the best deal, which is good to know and inform people that some lenders just do not budge on the charge that they're going to do or what the interest is for the bridge. And then others do negotiate and change, and they play off each other of what is a good rate, how much is it going to charge the customer, to what is a bad rate. And that's really interesting for customers to know, is that there's so many different deals out there. You've got to have trust in your broker, in your commercial broker or your regulated broker, in are they getting you the best deal that they can find.
Really good point. Again, yeah, just a few things to bear in mind there. And then, how does bridging work? I mean, is it the same as a normal mortgage? What's the difference here?
It's short term, Tessa. So like you said, a normal mortgage, you're probably borrowing the money over 25 years plus, 20 years, a long time, a long plan. And the lenders are fine with that. Whereas these types of deal, bridging loans, can be anything from 6 months up to 2 years of what is the plan. And it's temporary. It's just a case of buying it, renovating it, selling it, refinancing it at the end of that deal onto a normal mortgage is a very common thing. So they buy it, they do what they're going to do with it,
Nice.
renovate it, and then they would refinance that property onto a buy-to-let or a different type of loan, and then they would pay the bridge back with the profit.
Okay, it's really interesting, isn't it? And then we know that bridging loans are there to serve a purpose. They're fast, they're quick. But how long does it take to arrange one, Daniel?
I think the quickest arrangement I've made is 5 days in relation to getting it through. But that customer was known by the funder, by the lender, and they'd known it. They'd had a previous experience. They'd had a facility and gone through the details already. But it can be very, very quick. Again, it depends on how quick your broker is of getting the information, getting the deal, the property, getting them to look at the the property itself, but they are very quick. A matter of days or weeks, depending on how the service is with the lender and the broker and how. But typically on an auction, it's 28 days. So if you're doing an auction, the hammer goes down, you've got 28 days to exchange. So these types of bridging loans have to be very, very quick. But there's no hiding that they do cost a lot more than typical borrowing. Because of that, because it's so quick, because there's a lot more risk, they are going to be more expensive. But if it's still ultimately going to benefit the client and you're still going to earn a very, very good profit, it's just weighing it up of, do I have my own money or do I need to go to a bridging provider to get the property, to do the work?
I suppose it is weighing up your pros and cons, isn't it? But they're quite exciting, aren't they, bridging loans? It
Yeah,
works very fast. Okay, let's
very
continue
fast.
then. So some are first charge and some are second. So what does this mean?
Okay, so when you borrow on a asset, on a property, an asset like a house, a barn, a commercial building, when you buy that property, when you have a mortgage, you have a charge on it. So on the land registry, you've basically got your name against it. That if you wanted to sell that property, you wouldn't be able to sell it because there is a charge from somebody to say, no, you can't sell it until this is paid off, until there's a charge against that. So if you were getting a bridge, the bridging provider, the lender, sorry, would put a charge against that property that they won't allow you to sell it or move it into another person's name or an entity's name, like a company, until that charge has been paid off. And you can have first charges, which is the person who gets paid first. And then the second charge is once that lender's been paid off, then they get their money. So individuals
Right.
can make a charge. If I was lending you the money, I would put a charge on that property to say, I'm definitely going to get my money back. So if the property was repossessed or you lost that property, the people that have put a charge on that property get their money back, if that
Okay.
makes sense.
Oh yeah,
Yeah.
really well explained, really clearly put. You always break it down very well anyway, but no, that makes complete sense. So I know this is an important part, of the bridging loan world. So what is the exit strategy? You've got to have one, haven't you?
An exit, yes. So
Exit, yeah.
the lenders, the exit, yes. So the lender and the broker will talk to you very early of what is the repayment plan. How are you going to give the money back of bridging? So when you get the loan offered or even suggested offered terms of getting this borrowing, they're going to ask you, how are you going to repay it back? Are you going to sell the property, which is very common? So once you've done all your work and you've acquired it and uplifted the property value, you're going to sell it. So therefore, you're going to gain profit and then you're going to be able to pay the bridge back. That's a very common thing. Another exit strategy is a refinance option. So instead of having a bridge on it, which is more expensive type of borrowing, you can refinance that onto a normal mortgage. So that would be a buy to let, a HMO mortgage, buy to let, or something that once you've done the work and you've developed it, you can refinance it to pay back the bridge provider. That's very common as well. You might have the sale of another asset. So you might have a property in the background that you're selling that's going to give you enough money to pay the bridge back. But they certainly are going to question, how are you going to pay it back? Because at the end of that term, whether you've done a 6-month option, a 12-month option, a closed bridge with an end date, the end date is very, very important. So yeah, that's the big thing about the exit, is just making sure that your ducks are in a line, that you're going to pay it back when the funder needs it. And most bridging providers will extend for you. So if you're not at that point and you can't pay it back, then they will extend it. But it's going to be very costly to do that. So the client really needs to understand, I'm ready. I've got the money to do it in 6 months or 12 months and I can pay it back.
Right. Okay. So yeah, important part there. And then what if I have bad credit? Of course, this is a popular question. Can you still get a bridging loan if you have bad credit, Daniel?
Yeah, it all depends on the circumstances of how bad is bad. So if you've
Of
had
course.
a blemish on your credit file or something that can be explained, that's plausible, that's rational, then fine. There's no big problem there as long as it can be explained. Now, if somebody hasn't owned a house before, or it was a long time ago, and then they've got a really damaged credit history and a credit profile, it's going to be hard for the lender to be convinced whether they should, take a risk and lend the money to the customer, because their track record is not very great. So again, that's why the broker's experience of knowing, can we do it? Is it acceptable? Will they do it? What's the reason behind it? If you just had a life-changing event, or you got divorced, or you had a bereavement, or something went wrong, then it's natural that you're probably going to have a couple of months of a problem, or something's gone wrong. So gone are the days that lenders are not, they don't care about things like that. They understand that people might have a little problem, but what was the credit history before that event, and what's the credit history been like after that event? So they're a lot more, they're a lot more appealing
Yeah.
towards that, and the understanding, I suppose the word is, they
Yeah.
understand. So if you do, just speak to your broker and understand it. I would be surprised if somebody had a really bad credit rating and then came to me and said, I want to develop a house, can I have a bridging loan? I would kind of avoid that and say, I don't think you're the right, it's gonna work. But that's not the type of customer that understands this strategy, or this
Yeah.
way to invest in property. So I hope that answers the question.
No, definitely. Yeah, no, definitely does. And then this next question asks, I mean, what are the alternatives to a bridging loan? But are there any, or is it a unique product? I suppose it's there to serve a purpose, isn't it?
It is, yeah. It's very unique. It's there for a purpose. Now, the other alternative is, if you can go into a joint venture with somebody that you trust.
Yeah.
You've got very wealthy family members or parents that trust you, and you've got a lot of money that somebody else can lend you it. But ultimately, not everybody does have a big amount of money that you just go, I'll go into a joint venture, or I've got
No.
family money that I can throw at you. So they have to go to other means to be able to do it, and that's where the funders and bridge providers come in. But yeah, the alternative is, if it's a modern method of auction, it might be an extended exchange date. So you might be, you might be able to do a normal buy to let instead of it being bridge. But it's all down to the negotiation of when you speak to the auctioneer, or you speak to whoever's the vendor is, whether they will agree that time frame of exchange. But typically, if it's 28 days at auction, you have 28 days to get the funds through, if it's a buy to let, a normal mortgage, or bridge. And I wouldn't risk it. Because you're on the hook, you've paid your deposit, you're on the hook, you've got to exchange within that 28 days. So you wouldn't want to lose your deposit due to the
No.
terms and conditions of the auctioneer, and do that. But just
Right.
always make sure that you've got a backup plan.
That's a really good point. Yeah, have a backup. That's a really good point. Um, and then obviously we've got to talk about costs. We always do on the episode. So what costs are involved with a bridging loan?
This is not a good topic to talk about when it comes to bridging, because bridging is
Okay.
a very expensive form of lending. So the bridge charge, is expensive. Um, Typically, the interest is rolled up, so you don't pay a monthly payment while you're on the bridge. You can request to do that if you want with some providers, but it's rolled up, so you don't pay anything. But the interest charge of the bridge is typically expensive, on it. The other fees that are associated with that, you've got to look at the valuation. You're going to have legal fees to pay. So you've got the survey of the property, the legal fees. Other fees to consider are your broker fees, if you're paying the broker up front for their work, as well as the commission that they're going to receive from the bridge provider as well. But anybody that's doing this should point out to you what the charges are. So please look at the hidden. There shouldn't be hidden. It's got to be transparent. But I need to remind you, it's an unregulated space. So if the advice has not been very clear, and the deal and the rate that you're going to pay and the fees that's going to be included, it is what it is. They're going to say to you, that's what the fee is. Take it or leave it. So it is better, in my opinion, to go with somebody who's experienced as a broker, that is going to get you the deal and be transparent. But as a customer, I would insist of going, do I know how much it's going to cost? Are all the fees broken down? That's what I would expect. Done, done, done. Thank you very much, and then proceed. But it's difficult because there's a lot of other brokers out there that don't really offer that array of service and offerings. They just throw it in front of the customer and say, "There you go. I've got one. I've got a deal for you.
Right.
Take it or leave it." And then you just feel like, "Yeah, I'll take it," but it might not be the best deal that you can find.
No, so you need to know what you're looking at and make sure you're being told what you're looking at, which is sort of what you're saying there, isn't it? I think.
Exactly.
Yeah. Okay,
Yeah.
then. And then just lastly, I mean, how do you apply for a bridging loan? And I'm guessing this is where a mortgage broker like One Mortgages can come in and help.
Yeah, very true, very true. Yeah, you can go to commercial brokers. Um, if they offer it, just ask the question: Are you familiar with bridging? How much experience have you got? But you want to go with somebody who's got experience, that's got an array of many lenders to go at to get you different terms on it, and what are the best deals, what's the best array, what's the best rates that they can find of the commercial lending and bridging loans. How do you apply? You can, if you formed a relationship with the funder, then that's fine. You can do that, but you're just stuck with one lender, one funder. So why would you not revise that and go back to the broker to be able to have a selection of the best deal that's available? So in my eyes, it's always better to go with a broker rather than going direct to a funder or a bank. Yeah. So how would you apply? You'd obviously get the property that you're going to bid on or you're going to buy. So the more information that you can prepare with of this is the property I'm going to buy, this is the reserve price of what I'm going to buy it at, and that's how much it's going to cost. The broker or the person that you go with will ask you a series of questions about how much money have you got, what's your exit, how are you going to do it, how are you going to fund it, and they should be able to give you a good idea whether the numbers work and it's going to profit you or not. If it's not going to be profitable, the broker should be telling you it's not really going to work. You're not going to really make. What's your strategy? How much money are you going to make on it? And whether it's a good buy, whether it's a good investment. It's a good investment to do, because the lenders obviously won't do it if it's not. So that's a good thing, really. If they're going to throw money at you, hopefully they're going to know whether they're going to get their money back or not. But it's still a big consideration for a customer to take this type of a loan on. So bear that in mind.
Yeah, no, some really good points again there. We've covered an awful lot on bridging loans. We always do on these episodes, don't we? But is there anything else we need to consider with a bridging loan, or do you think we've kind of touched the basis there on it all?
Yeah, I think we've covered quite a lot to go over.
Yeah.
If anybody's out there or does want an opinion on whether something can be done, what's in the background, what's your circumstances, just pick up the phone, visit us at our website for a message. You can pop a message to us. We're on all the social channels, so we're available. But yeah, just speak to somebody who's in this space and involved in it. And if you are looking to invest in property, then speak to a broker to talk about what options and deals are available.
There we go. Well, that's been brilliant as always, Daniel. Thank you for that. And I'm sure we'll see you and listen to you on another episode soon.
Thank you.
You take care. Bye bye.
Bye. Hi again. Thanks for watching. If you'd like, share and subscribe to the channel, that would be amazing. And for more insights and information on mortgages and insurance, look out for our next video. Thanks.